The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Welcome, everyone. Happy Monday. Welcome to another edition of Breakout Investing on TFNN. Hope you all had a great weekend. I'm sure many of you got those brackets going for the NCAA basketball tournament. A lot of broken brackets out there, but hope yours are still hanging in there. 4 shows left of Breakout Investing on TFNN. Today, Tuesday, Wednesday, and Thursday, and my last edition of Ultimate Growth Stocks will be published on Tuesday. Moving on to a new opportunity at the end of this month, and time for a change. But again, just wanted to give a big thank you to all the listeners out there, and listeners and subscribers as well to my newsletter. So final weekly update coming up tomorrow, and thanks once again for all the support out there. All right, let's take a look at the markets. We'll start by checking in on the NASDAQ composite here. Not such a great day for the market taking shape here. Have the NASDAQ, looks like an outside day taking shape for the tech index. It is down almost 12 points. 0.4% to 3233. Right now, volume is tracking higher than Friday. So don't look now, but if we do end with another higher volume decline for the NASDAQ composite, that would make 5 higher volume declines in recent weeks. That tells you there's some distribution, institutional selling that has been making its presence felt in the market for some time now, but it's going to be a close call today because NASDAQ volume right now only tracking about 3% higher than Friday. NASDAQ volume on Friday last week was 1.65 billion shares. That's below average, but we're tracking about 3% higher than that right now. That could change by the close. And NYSE volume is tracking about 10% higher than what we saw on Friday, which was 619 million shares. So it's possible we could get another higher volume decline today. Reason enough to be very defensive out here. Don't need to be putting new money to work aggressively here. In fact, if you're putting any new money to work at all, I would still say that the risk still outweighs the reward here, because you, even though the market is still in an uptrend, it is an uptrend that is really starting to show signs of wear and tear, and that makes it a difficult environment for stocks of all ilk to make headway. So that's a look at the NASDAQ composite. Let's check in on the S&P 500 here. S&P 500 also trading near its session low, down 6.5 points, 0.4% to 1550. And the Dow Jones Industrial Average also working on an outside day here, down near its session low, down about 77 points, 0.5% to 14,435. Why don't we check in on the New York Stock Exchange Composite Index. This is a really broad, probably the broadest based index out there, and you can see the NYSE Composite down 50 points, 0.5%, almost 0.6% decline to 9,015 outside day, taking shape for the NYSE Composite as well. So a lot of red in the growth screens today. Again, it's just a risky environment out there. We've been talking in recent weeks about the number of extended stocks out there, stocks that are just too far past proper buy points to consider buying at this point. And really, that's a good argument for the market to pull back a little bit here. A little pullback will give some of these big leaders time to catch their collective breaths and form bases and eventually stage possible breakouts to new highs. But that's not going to happen until the market goes through a meaningful consolidation phase. Folks, don't forget, a great way to listen to all TFNN programming is on your smartphone these days. If you're not in your car or listening on the radio or at your computer listening on your PC, you can open your smartphone browser and type in tfnn.mobi. That's a great way to listen to all TFNN programming. Very simple, very intuitive, very easy. And also don't forget about Tiger TV on the homepage of TFNN.com. Channel 1, the show is carried live. It is archived on Channel 13. Tiger TV, not only do you get the show audio, but you can look at charts live right along with me as well. And Tiger TV, also viewable on your handheld device. All you have to do is type in TFNN.com. Over on the top right-hand side of the homepage, just click the box with those electronic devices in there. Click that box, and Tiger TV will recognize what sort of device you have, and Tiger TV will start streaming on your phone almost immediately. All right, taking a look at the U.S. dollar. Right now, higher on the day, up 82.80. That's up about 0.3% or so. Checking in on the U.S. dollar index here. This chart is as of Friday's close. So you can see headed into this week, U.S. dollar index working on 3 straight declines. The greenback really took a fairly substantial hit on Friday, relatively speaking, down almost 0.6% to 82.53. But the greenback in rally mode today. Dollar index last trading at 82.80. April gold lost $1.60, 0.1%, settles at $1,604.50 an ounce. Did finish well off its session low of $15.8840. Bond yields well off their highs. 10-year note at 1.91%. Let's take a look at a chart of that 10-year yield because you'll see some interesting price action today. You can see the yield today hit a high of 1.97%. Tried to get back above that 50-day moving average, but again, near its session low. 10-year note right at around 1.91%. And then the 30-year bond, very similar setup here, hits a high of 3.19% today. Last trading at 3.14%, near its session low. And finally, May oil. $94.81 is the close for May oil, up $1.10, 1.2% gain there. Going back to the Dow, you can see the major averages were initially encouraged. Woke up this morning, saw pre-market futures pointing towards a nicely higher open. That enthusiasm was pretty short-lived, though. The Dow hit an intraday high today of 14,564. 14,564, but we said just last trading at 14,442. Cyprus did secure a bailout. The market initially viewed that as good news. The Cypriot government agreed to raise 4.2 billion euros. That's the equivalent of $5.5 billion in return for a $10 billion euro rescue. Other news, let's take a look at shares of Dell. Having a good day, nice gap up for Dell, up 2.9% today to $14.55. Dell is considering new buyout offers from Blackstone and Carl Icahn. Surprise, surprise. That could be, or looks like it is, superior to an initial proposal by Michael Dell and Silver Lake Partners that valued the company around $24 billion, a little more than $24 billion, or $13.65 a share. Blackstone wants to buy the company for $14.25 a share. Icahn wants to buy up to 58% of Dell shares for $15 a piece. So not surprising to see Dell trading higher. That does look like a sweetened offer from both Blackstone and Carl Icahn. Shares of Dell last trading at $14.55. Did have a couple small acquisitions today by some big tech names. Let's take a look at Yahoo. Yahoo really has been a strong performer for some time now. Hits an intraday high today of 23.88, but is near its session low at 23.38, up 11 cents on the day. Dell is going to acquire UK-based startup Sumly for an undisclosed sum. Sumly is a mobile news aggregation app, apparently that was developed by a 17-year-old. The app itself will be discontinued, but the technology will find its way into several Yahoo mobile offerings. And also Apple. Apple really has come back to life here. noteworthy technical action. We talked about that last week, moving back above its 50-day moving average. Stock is having problems making headway today. It is up 98 cents to 462.89, but well off its intraday high of 469.95. Apple announced a tiny acquisition. It's going to pay $20 million to acquire indoor GPS company Wi-Fi Slam. And Oracle, another name in the acquisition news today. Oracle is going to buy mobile software maker Tekelec. Terms weren't disclosed, but it's going to integrate Tekelec's solutions with products from Acme Packet, which Oracle acquired in February for $2 billion. I don't believe that acquisition has closed yet. It has been a rough going for shares of Oracle recently, as you can see. Stock gapped down on Thursday. It followed through to the downside on Friday, and it is down another 2.25% today to 31.26. You know, when you think about it, it's very difficult to do what Oracle is trying to do here. Clearly, this is a company that's getting its lunch eaten by arguably a name like Salesforce. Oracle was very late to the party getting into cloud computing. It's trying to play catch up. Anytime you're a large cap company like Oracle trying to play catch up and reinvigorate earnings and sales growth, that is just very, very tough to do, especially when you're the size of Oracle. I think the market is realizing that, and a big reason why Oracle has really started to lag the market here. I mean, there are a lot of integration issues that are going on at Oracle with these acquisitions that they've made recently. So this is a stock that looks like it's in a little bit of trouble here. Other news, BlackBerry. BlackBerry's reporting earnings later this week. Before the open Thursday is when their report is going to come out. It is looking a little bit vulnerable here. Shares of BlackBerry down 59 cents, 4% to 14.32. Took a big hit on Friday. That was the day the BlackBerry Z10 was launched in the U.S. And some analyst notes are coming out saying that the demand does not look, it's okay at best, just kind of lukewarm, lackluster. I think analysts were looking for better. Goldman downgraded BlackBerry today to neutral from buy, lowered its price target to 17, which is higher than where the stock is trading right now at 14.32. But most analyst opinion on the stock, not all that hot, thinking the Z10 was going to be a big game changer for the company. That may not be the case. So BlackBerry looking a little vulnerable ahead of earnings on Thursday. And then WFM, a few other downgrades to talk about here. Whole Foods Market downgraded to neutral by Piper Jaffray. Price target lowered to 89. This is a stock that has really started to lag the market as well. Shares of Whole Foods down 2% today to 85.98, stuck below key support levels, as you can see. Coming right back, folks, in about 3 to 4 minutes. Ken Shreve with you, Breakout Investing. Stick with me.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
This is a market where everyone is accustomed to the dip buyers coming in during the last hour of trading, but there is going to be a time where the dip buyers stop coming in, and I have to say, typically when you get to a point in the market where higher volume declines, institutional selling, distribution days really start to become prominent. We're not there yet, but we're getting close, frankly. That is worth paying attention to. It is worth taking a look at what you own. If you've got some big profits out there, nothing wrong with taking some money off the table here. But we are bleeding into the close here with the Dow now down 92 points, 0.6% to 14,419. The S&P 500 down a little more than 8 points, 0.5% to 1548, and the Nasdaq Composite down 16 points, 0.5% to 32.29. Let's take a look at shares of Red Hat, also reporting earnings later this week, Wednesday after the close. Red Hat really taking a hit, looking vulnerable. A lot of bad news possibly priced in here, but never like to see the amount of institutional selling that's been going on in Red Hat basically since February. It's been under quite a bit of selling pressure, down another 3.7% today to 48.90. Again, earnings due Wednesday after the close, with earnings expected to be up 3% from a year ago to 30 cents a share. Sales up 18% to $349.6 million. Of course, Red Hat most known for its Linux open software, and we'll see what the company has to say Wednesday after the close. We should also be hearing from Veeco Instruments soon. There's no earnings date yet, but this is a stock that has really started to come to life in recent weeks. It did gap up today and still up almost 9%. Impressive move for Veeco Instruments. Last trading at 38.03. Stock got an upgrade to buy from sell at Canaccord. Price target raised from $25 all the way up to $48. That's a pretty big price target increase by Canaccord. Pretty big breakout today over resistance at 35.92. Company makes equipment used to make light emitting diodes, and that is a pretty intriguing business right now. We've talked in the past about Cree, C-R-E-E, and Cree has really turned into a big-time market leader. This company operates smack dab in the light-emitting diode market, and but it's kind of a tale of two companies here. Cree, good growth prospects, good fundamentals. Veeco, decent looking chart here, and definitely under accumulation. But what is interesting with Veeco Instruments is that there's no growth going on here, and to be involved in such a dynamic market as light emitting diodes right now, a lot of people talking about strong growth over the next year or two for the LED market. But all you see in recent quarters is declining earnings and sales growth for Veeco, and then their profit, their 2012 year has not quite ended yet, but 2012 profit expected to be down 74% from 2011, and then 2013, after they report 4 quarters of earnings, the earnings of $1 expected to be down 23% from 2012. So decent chart. And a stock that's under accumulation, but I don't have a handle on Veeco's fundamentals at this point. They're involved in a pretty dynamic industry, but has not translated to the bottom line yet. So we'll keep an eye out for an earnings date from Veeco Instruments. Definitely strong demand for shares today. Other newsworthy stock here. Let's take a look at United Therapeutics. Makes a trip right down to its 50-day moving average. You can see that. Hits a low of 56.85. Where is its 50-day moving average? 56.88. So it stops right at that 50-day line, has rallied back, is trading near its session high, but still down 2.4% to 59.51. Story here is that the FDA did not approve the company's treatment for pulmonary arterial hypertension, known as abbreviated PAH. This is the FDA's second rejection of the drug, and judging by United Therapeutics' price performance in recent months, there was some optimism that this drug was going to be approved. So kind of a surprising decision here, but UTHR finding initial support at its 50-day moving average. We do have a couple of more FDA decisions coming up. We mentioned Biogen IDEC. This is a stock that has been going gangbusters in recent weeks. I think a lot of good news priced in here, but on Thursday we should hear from the FDA regarding its oral MS treatment BG12. A lot of people expecting this drug to be approved, and it could be a blockbuster for Biogen. Question is, has the good news already been priced in? We'll know soon enough. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Decent earnings from Dollar General earlier today, with earnings up 14% from a year ago to 97 cents a share. That was 7 cents above the consensus estimate. Sales up close to 1% to $4.21 billion, but that was a little bit below estimates. Same-store sales up 3% in the quarter. For the full year, the company guided earnings in a range of $3.15 to $3.30. That was mostly in line. Analysts were looking for $3.27. Pretty good sales guidance. They're looking for sales in 2013 to be up 10 to 12% from 2012. And same-store sales growth of 4 to 6%. So the stock right now up 1.8% to $50.96, well off its intraday high of $52.91, but a decent day for Dollar General. These dollar stores tend to move in groups, so take a look at Dollar Tree. Dollar Tree only up 7 cents now to $46.91 after hitting an intraday high of $48.61. So earnings from Dollar General pretty good, and then boy, stock under heavy institutional selling, but sort of a relief rally today for shares of Apollo Group, a for-profit school stock, up $1.20, 7% gain to $18.24. Another gap up that is trading near its session low. Apollo hit an intraday high of $19.63, and again, trading at 18.24 now, so well off its high. Numbers here pretty good, at least in terms of what analysts were expecting. Earnings fell 40% from a year ago to 34 cents a share. Analysts were looking for 18 cents, so good there. And sales down 13% to 834.4 million. Estimate was for 822.8. So good beat on the bottom line and top line for Apollo Group. Still a broken stock here, though. Some will say that all the bad news has been priced in here, but one thing that is consistent with these for-profit school stocks is just sort of a lack of earnings visibility, not only with Apollo but all the other names in the group as well. So not a group that I'd be looking at too closely here. Take a look at some heavy volume movers today. Home away. We mentioned home away on the show last week. The stock is trading near a session low, only up 9 cents now to 33.20. Recent breakout here over 31.25. This is a company that operates an online marketplace for vacation rentals. Last week, shares were upgraded to overweight by Morgan Stanley with a $36 price target. So definitely looking a little bit extended up here. Remember last week, Home Away inked a partnership with Travel Mob, an Asia-based marketplace that basically matches owners and managers of vacation rental properties with travelers. So Home Away extending gains here. And how about that move for lumber liquidators? Look at the daily chart here. Little breakout for lumber liquidators today, up 2.6% to 68.69. Look at a weekly chart here. See what that weekly chart looks like. We've been talking about this 3 weeks tight pattern when a stock breaks out from a base and then just flashes a series of tight weekly closes. You can see that if you're watching in Tiger TV. You can see these tight weekly closes right here. Basically headed into this week, you had a couple of just tight closes in a row here. That can often fuel additional price strength, and you do have nice volume in lumber liquidators today. Let's go back to its daily chart and check out the volume. This is a stock that normally trades about 700,000 shares a day. 1.2 million shares have traded already. We still have about 20 minutes left to go in Monday's session. So nice accumulation of shares of lumber liquidators today. Buying that 3 weeks tight pattern, it's not an ideal spot for an initial position. If you're going to do it, you just really should just nibble at a small amount, as opposed to the ideal time to buy a stock is after it's, or on the verge of breaking out of a long consolidation where it's been, pausing, digesting gains, and getting ready to break out from a basing pattern. So that's really the optimum time in the right market to buy a growth stock. This 3 weeks tight pattern is, typically seen after a breakout, and if you bought at the breakout, it's a great opportunity to add to an existing position. But anytime you add to an existing position, you're always adding a smaller amount. So buying for the first time off a 3 weeks tight pattern, I've done it a handful of times over the past 15 years, and it sometimes can work, but it's always best to get a stock when it's coming out of an initial base. And the first time lumber liquidators did that was back in January, earlier this year. You can see the breakout right here over about 58 bucks a share. How about that movement in shares of Visa today? I think it was Nomura that had positive things to say about Visa. What you have here is actually a base breakout. That's just what I got done talking about. This is exactly what a base looks like. You can see how this is a base that started. Ironically, when a lot of stocks were breaking out from bases during the second week of January and beyond, this was the time when Visa actually started to form a base. So you can see on the daily chart just sideways movement. This is what a base looks like. A stock pauses. You see a big uptrend here, and then it moves sideways. And what you have here is a breakout over 162. So according to buy rules, this is not a stock that is extended way too late to buy because it's been running higher forever and ever. No, it's just today is the breakout day. It's breaking out over 162. So that's bullish. Now, the issue that I have with Visa, let's look at its weekly chart here. And you've heard me talk about late-stage bases. Here's the base that here's the most recent base that it's breaking out of. But you go all the way back to the summer of 2011. This is June, July breakout right here. And you actually count the number of bases that it has broken out from. This is, at an absolute minimum, a fourth or fifth stage base. And I learned to recognize late-stage bases during the years I worked at Investors Business Daily, and breakouts from late-stage bases, bottom line, are just more prone to failure than breakouts from early-stage bases. So this is a classic case of caveat emptor, buyer beware. You're talking about a stock that's made a major price move already, and it's breaking out again. But it's a breakout from a late-stage base, so I typically avoid buying these types of breakouts. Let's take a look at MasterCard, too, because I know I talked about MasterCard recently as another late-stage base taking shape here. And again, the same situation. In MasterCard's case, if you're looking at the weekly chart in Tiger TV, here's 1, 2, 3, 4, 5 bases, that I counted since early 2011. So between the two, Visa clearly the leader right here. It's breaking out. MasterCard is not. And in fact, I think I mentioned MasterCard last week is looking vulnerable here, trading right at its 10-week moving average. If this market does decide to come in, MasterCard, I could see MasterCard easily coming in 15 to 20% off its recent high. So good breakout for Visa, but it's a breakout from a late-stage base. MasterCard, same situation, not a breakout, and technically looking a little more vulnerable than Visa, but as you can see, also a late-stage base taking shape here. FleetCor FLT. Let's take a look at shares of FleetCor under some pressure, but really not much. Stock that's also very extended up here. I think FleetCor was another example of a 3 weeks tight pattern. Let's look at a weekly chart here for FleetCor. Yeah, a little less obvious, but I think you had 3 weeks tight, not last week, but the week before, and then a breakout last week over that 3 weeks tight pattern. So holding gains, but yeah, last I checked, the stock earlier this session, go back to the daily chart here, FleetCor normally trades about 725,000 shares a day, and it has traded 835,000. So volume a little bit heavy, but not by that much. And it's only down 41 cents today to 75.41. So it was looking a little more worse for the wear earlier today. Some sellers in LinkedIn as well. LNKD. Doing a good job of holding gains, but stock is down 3% today, underperforming to 176.02. This has been a massive winner in the market. LinkedIn normally trades about 2.5 million shares a day. It has traded 2.2 million, so not looks like volume is going to be about average in that name as well. I think I mentioned SMTC, another one to keep an eye on here. Semtech, this is a chip designer, looking pretty solid here. Daily chart shows that it is up 2.3% to 34.45. And take a look at a weekly chart for Semtech, and you've got a stock that's looking pretty good here. Would like to see it base, would have liked to have seen it base for a little while longer. This is not a 3 weeks tight pattern. This is a stock that, I guess put the breakout over 30. It's at 34.45 right now. So definitely extended. Would love to keep an eye on this one for a pullback to the 10-week moving average. Excuse me, at 31.84. Wouldn't be a buyer up here around 34, but a pullback to the 10-week line would be a much more palatable entry point. But another stock showing relative price strength out there. Checking in on some of the home builders that we've been watching. Ryland Group, RYL, recently broke out over some resistance at 40. Still want to keep an eye on this one because Ryland Group looks like an outside day taking shape here, but this one could easily pull back to the 40 level, form a little handle area from here, and that could pave the way for a new breakout over 43. So let's watch how this most recent pullback takes shape. If it drifts lower in light volume, again, comes down to the 40 level without much in the way of heavy volume selling, that's a handle area, and then once a handle area forms, that serves to shake out the last remaining sellers. That sometimes can pave the way for a nice breakout. So Ryland Group under a little bit of pressure today, down 25 cents to 41.71, but not showing anything in the way of meaningful sell signals. And then Pulte Group, PHM, looking a little rougher than Ryland Group at this point. Pulte underperforming by quite a bit today, down 1.9% to 2025. It looks like a test of the 50-day moving average is in play here. The 50-day line for Pulte is at $20.04, so it's only about 25 cents above the 50-day moving average. So that's a look at some of the home builders. HCA, the hospital operator, working on a base here, actually trying to break out here. Just haven't seen any volume come into the stock yet. This is actually another example of what a base looks like when it forms. You can see kind of an ugly day back here in late January, early February, where it reversed off its high. That was the start of its base. Started working its way higher. I'm going to just watch how this one trades for a little while because it's it's hard buying technically strong stocks in a market, frankly, where you've got distribution starting to increase, and that's the bottom line. So you want to pay attention to these stocks that are holding up well and trying to come out of bases, but it's the current market is just a little bit unsettled here. Las Vegas Sands, LVS, another base building stock here. Again, base that starts back here in late January, early February. Put in a low around 48 back in February. Has been working its way higher. Volume good, but not great. Is it going to try to break out? We'll have to wait and see. Las Vegas Sands hit a high today of 55.79 and was last trading at 54.56, up 1.3% on the day, but again, trading near its session low. And Tupperware, also worth paying attention to here. Tupperware continuing to show relative price strength, holding near highs. I think I've got a weekly chart here for Tupperware, and what I like about Tupperware, when you look at that 10-week moving average, you had a beautiful breakout for the stock, over $67, $68 a share. It's now at $80.64, but just last week you had a nice little bounce off the 10-week moving average. So, again, bounces off the 10-week line, 3 weeks tight. These are good opportunities to add to an existing position. And if you're going to buy for the first time, just nibble, maybe a smaller amount than what you initially would buy. So Tupperware still performing well after a nice little bounce last week off its 10-week moving average. And also like the way Aruba Networks is holding gains after its gap up back here in February. Still looking very, very strong here. Not apparent to me that this one's ready to fill that gap from February, but it's just holding gains nicely. And the weekly chart here for Aruba Networks is going to show nice, tight, sideways trading for a little more than 4 weeks now, holding above that 10-week moving average. This is one of the better looking charts out there, actually. So Aruba front and center on the watch list for possibly higher prices. Just a question right now is, where is this market going? What does it want to do? Increasing distribution days, got to pay attention to that. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Major averages rallying a little bit into the close here. I guess that's good to see. Right now, the Dow down 57 points. Just a little while ago, it was down more than 90 points. So that's a 0.4% decline for the Dow to 14,455. NASDAQ Composite down 10 points to 3234, and the S&P 500 down close to 5 points to 1552. NASDAQ volume has quieted down as the session has progressed. It's tracking pretty much equal now with what we saw on Friday, which is 1.65 billion. So it remains to be seen if we are going to get another higher volume decline for the NASDAQ today. On the New York Stock Exchange, it's looking a little more likely because NYSE volume right now tracking about 10% higher than what we saw Friday, which was $619 million. All right, let's head out to Alexandria, Virginia. Talk to Michael. How you doing, Michael?
Good, Ken. How are you?
I'm good. Nice to hear from you.
Yeah, likewise. By the way, congratulations for your new job at IBM. I mean, with Business Daily, Investment Business Daily.
Thank you very much. Appreciate it.
As a matter of fact, I've known of you back in the days when you used to do IBD, the videos and all that.
Yes, sir.
Yeah, that's when I started knowing about you and everything. So it's good.
Oh, good deal. Yeah, I'm looking forward to it.
Here at the radio, but hey, that's the way it goes.
Okay, thanks for the comments.
Okay.
So you want to take a look at United Rentals?
Yes, sir.
Did you have a question about it? Do you own it? You thinking of buying it, or?
Yeah, well, I bought it, but it's exactly what I got it, and it seems like he wants to go down. I don't know.
Yeah, well, I mean, it's forming a base. I mean, it's just been consolidating gains for
a while
about 5 weeks, which
is
it's just taking a little breather. I mean, this is a stock that has made a pretty good run, and it's just taking a little breather here. So it's forming a base. I'm a little wary of stocks trying to break out at this stage of the game.
Right.
It's holding near highs. I tend to agree with you, though. I mean, owning a stock while it's basing, you don't really have a good feeling on which direction it's going to go. It's having a hard time here holding on to its 10-week moving average. So this is one where I'm sure you use stops, and I would just keep a pretty tight stop on it.
Okay, I'll do that. Thank you.
Okay, take care. Good to hear from you, Michael.
Yeah, likewise, and good luck on your new endeavor.
Okay, thank you, sir.
Thank you.
All right. Yeah, so stocks forming bases are definitely worthwhile, keeping an eye on here. It's just that, a lot of the good breakouts happened back in January. All right, next we'll go to Chicago, talk to Robert, who wants to talk Whole Foods. How you doing, Robert?
Hey, Ken, thanks for taking my call. I guess, Ken, I'm long Whole Foods, and I thought I might head up towards into 90s toward the hundreds again. And do you think the game is over with Whole Foods here for a longer term perspective?
Yeah, I do. I think,
okay.
I think that, first of all, there's very significant resistance. That's the resistance the stock's gonna have to overcome at 90 and 91. I mean, that's a pretty big wall for the stock here. Even if it can get back above that, I mean, that's still 4 or 5 points away from those price levels. So I mean, this to me, again, you look at a weekly chart for Whole Foods Market. This is a stock that has made a massive price move, right? Up several 100%. So it's a growth story that at one point was very intriguing, but at this point, I think the reason for its sluggish price performance is concerns about slowing growth ahead, even though, they do have plans to grow. It looks weak technically to me.
Yeah. Okay.
Yeah.
All right, Ken.
All right. Thanks.
Thanks.
All right. Yeah. Whole Foods, weak technicals, significant resistance at 90 and 91. So it could rally up that, but I would be a seller on any strength. Coming up next, the Tom O'Brien Show. See you back here tomorrow, folks, 3 o'clock Eastern. Have a great day.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.